Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Beau Eckstein with us. I am super excited to have Beau here because he is here to talk about one of the issues that most investors run into very early on, which is finding capital. Beau is an expert specifically in SBA financing, which if you're in an industry like mine, self-storage, that is an ideal type of financing to go after. So I'm super excited to have Beau here. He has three companies: Emerging Lending Group, Emerging Franchise Group, and ExpenseSavvy, which means he's got plenty of experience and wisdom to share. So Beau, thank you very much for hopping on.
All right. Thanks for having me. I'm excited to be here.
Absolutely. Just like every other episode, I told you before we got on here, we like to start with stories. We like to hear how people got started. So why don't you take us to the beginning? How'd you get started in real estate?
Sure. So let's walk back till I was about 19, 20 years old. I was trying to figure out what I wanted to do with myself. I either wanted to be in law enforcement or real estate. I quickly decided I wanted to be in real estate. So at the age of
pretty different career paths there.
Yeah. I wanted to be a detective. When I was younger, I worked in loss prevention. I used to bust shoplifters, and it was a lot of fun. But anyway, so I stumbled into the loan business, mortgage brokering, and I got my first job. A friend of mine from the gym said, "Come work at our office. You can do telemarketing." So I started at 20 years old, I think, 19, 20, making calls for mortgage brokers to get leads. And I was really good on the phone. And then quickly I said, I'm going to get my license so I can be a mortgage originator. And so in California at the time, you had to get your real estate license to originate mortgages. And so that's what I did. I got my California real estate salesperson license at 20 or 21 years old. Just kind of dove into the loan business and ended up moving to Lake Tahoe. We opened an office there in 2005, 6. And then the crash of 2007 happened. I owned a lot of real estate. It was a hard time because my lending business froze and I had all these assets that weren't performing. I was in my 20s. And then I ended up moving back to the Bay Area and with my tail between my legs and just said, what am I going to do? All I know is real estate. So I've always been selling real estate or originating loans. And then I started working for a hard money fund and I used to originate. And then from there, I said, oh my God, if these guys are making all this money flipping houses, I can do it. And so I put together a little buying crew, and I had a money partner and a contractor, and we would go in and do flips. And I rebuilt my credit and my nest egg a little bit from the downturn to 2007. We started flipping houses, and that was fun. And then I started investing out of state in the Midwest and buying rental properties in the Midwest. And then I kind of dove into understanding commercial lending. So I do a lot of loans for investors buying multifamily, utilizing SBA for self-storage and buying businesses. And that's where my business is today, kind of evolved to in a nutshell. But I've flipped a lot of houses and done a lot of residential real estate investing. So
cool, man. I love it that you got a really diverse background. I mean, you're originating loans before 2008, so you have that experience. You went through the shit in 2008, and I've actually never heard from the other side of the spectrum. I've heard of people who owned properties and they stopped performing, but I haven't heard from somebody who was handing out loans on that side. So you experienced there was a lot of defaults. Obviously there was across the board, but even within your own business, there was a lot of defaults from the 2008 crash.
It was so stupid. We would write 100% financing on non-owner occupied property.
100% financing.
Yeah, stated income. We'd have like bank statement programs, but a lot of it was stated, so you could just get you could spruce up we had like subprime loans, and they would do these what we call this non-QM, and the reps would come to our office and we'd go, okay, how can we get this deal done? The lady, it's a lady that works in Las Vegas as a stripper. I'll use that, and she's an entertainer on that loan application, and she owns 4 houses and like never qualified. So fundamentally, when I got in this business, it was just screwed up, right? Yeah. And the subprime lenders just wanted to lend money, and so nobody had to qualify essentially. And so, when it came down to it and the market started going sideways, what do people do? They go, well, I'm over leveraged. This property, I can't really afford the property. I was speculating, and we got this huge dose of foreclosures. And then even people were doing what we call strategic foreclosures or strategic default. So it was a lot of the media played into it too, which made it worse. And what's interesting is now we've spent like 12, 13 years in a bull rush in the economy. And now you're starting to see signs now. You're seeing like Bitcoin and a lot of these stocks and stuff just plummeting. And now, like I'm in Las Vegas, you're starting to see inventory finally creep up. And so the question now is are we going to give back some of the 30% appreciation we got in the last 12 months? And my guess would be yes.
Yeah, we're going to definitely see a hit there. I agree. But I'm sure, having that experience pre-2008 and then getting back into the industry after 2008, you've seen both sides. So I'm sure you have a lot of good wisdom that came from both of those experiences, the up run and the crash, which means you're prepared today to both on the lending side and for the investment side. Yeah,
exactly. You gotta learn from your mistakes, and I didn't know what I didn't know back then, and now I understand that markets do cycle, and there's good times, there's bad times, and you got to be ready for each time. And I think right now it's, even though in inflationary markets you don't really want to have cash, but having cash on hand and having a lot of free available credit. So when, I always build business lines of credit and things like that. So I'm ready to take advantage of opportunities that might come in the next 6 to 12 months.
Yeah, absolutely. So I do want to jump in specifically to types of loans, different tools that investors out there can use. I know you said right now you are focused more on the commercial side, which is great. That's my focus. So put your hat on for a new investor, somebody who, let's just say they're getting into their first commercial deal. What should they be looking for when they go for the financing? You go to finance a property. I know you focus on SBA. What's the advantages of SBA over commercial lending? What are the questions that these people should be, have in their mind when they go to their lender?
Sure. You have a little bit of feedback in your sound too. So, but I'll address that. So first, we're going to look at what kind of commercial asset it is. Let's just say it's self-storage, because I think a lot of people that follow you like self-storage. An SBA is a government guaranteed program. So SBA doesn't make the loans; they guarantee a certain percentage of the loan. There's two main programs. There's the 7A, which is a versatile tool. The 7A doesn't have to be real estate. It can be, but it doesn't have to be. It could be for a business acquisition with no real estate.
Laundromat, whatever it is.
Yep. It could be I've got a guy buying a concrete company right now for $1 million too. So it could be business acquisition. Where the 504 is specific to hard assets like real estate or heavy machinery. And so the 504 is good for certain reasons, and the 7A is good for certain reasons. So if we're looking at a self-storage facility and it's a value add type of deal, we're going to usually use a 7A, because the 7A has got a 3-year prepayment penalty versus a 504 has got a declining 10-year prepayment penalty. So 7A would be the option there. You can build in CapEx. So if you're buying an existing facility, and even if the debt coverage is a little soft because it's mismanaged, we can do these type of turnarounds with a 7A. And so what I can do is we can go up to 90% loan to cost, depending on what the actual financials are and the bank or non-bank SBA lender we work with on each particular deal. But generally on these turnarounds, you're probably looking at 80 to 85% of total project costs. So I'm going to finance the $1 million acquisition. I'm going to finance the $300,000 of CapEx. I'm going to finance the mortgage and the SBA fees. And so when we add up all these fees,
you
finance
the fees as well. I actually didn't know that.
Yeah. And we can, with a 7A, we can actually, you're going to have an employee and some startup costs.
Yeah. So capital reserves, stuff like that can also be rolled into it.
Yes, exactly. So then let's say that your total project cost is $1.4 million. We can lend up to 90%. But on a turnaround where it's the debt coverage is a little weak, we might not be able to get to 90. It might be 85% loan to cost. But you can see it's like a bridge loan, but it's cheaper cost of funds. I mean, rates have gone up significantly, but you can't get this type of high leverage anywhere else.
Right.
And so then what I like about the 7A for these turnaround properties is that it's only got a 3-year prepay, and you can refinance conventionally after, or potentially go into a 504 on a refinance. A 504 is 2 separate loans. The 7A is just one loan. 504 is 2 loans. You have a senior loan and a junior loan. The senior loan is the bank piece. The junior loan is the guaranteed piece by the SBA. And so usually what happens is the bank funds the first and the second piece, and then there's what's called a debenture that happens on a 504, and then the second piece is sold off and guaranteed at that point. So the bank actually funds the first and second on those. But the SBA 504, the advantages there is the second piece is a 25-year straight fixed loan, and that's the advantage. And we can do up to buying an existing business or an expansion, we could do 90% financing. So on a $1 million deal, $500,000 would be the conventional bank piece, $400,000 would be the SBA guaranteed second loan, and then 10% equity injection from the sponsor.
Gotcha. So that sounds awesome. Obviously, 90% loan to value is something you always want. At least for me, I always like to put as little money down as possible, just so I have cash reserves. But there's always a catch. And I haven't used a SBA loan yet, but I have heard, from people who have used them, and they tend to have. There's mixed reviews. Obviously, you can put little money down, and it's a good deal for some people. What are the situations where it wouldn't make sense for an investor?
Well, it wouldn't make sense for an investor if it looks like an investment, meaning like whoever is going to be the sponsor. Whoever owns more than 20% has to go on the loan application and being guarantor of the loan. So a lot of times people get creative, and then there's like 5 investors that each own like 5%, and so when it looks like an investment, sometimes they don't like it. What are some of the downside is sometimes if there's a shortfall of collateral, the SBA might want to put a second lien on like your primary residence, for example, or an investment property. Yep. But typically with the real estate involved, it's not needed.
The real estate itself is the collateral.
Yeah. But sometimes if there's a shortfall, it may be needed. But I'm doing an RV park right now. That's a turnaround project. So it's a really versatile tool. Why you wouldn't want to use it is if they look for collateral, or if you were getting some bridge financing, which I do a lot of bridge financing too, where you're just going in, you're doing value add, then you're going to refinance at the new value and pull out your equity. If you're going to execute that plan in a year or 2 years, then you wouldn't want to go into a 3-year loan. But typically what I find is that it usually takes about 3 years anyways for a full turnaround. And at that point on a 7A, you're golden. Now, if you're buying a stabilized property that doesn't need much CapEx, you might want to go into the 504 and just get 90% financing. You're not going to get 90% financing anywhere else on self-storage.
Yeah.
And it could be for building. You could do ground up financing with self-storage. So that's another huge opportunity. You can do expansion. And you're limited to $5 million of total SBA proceeds.
Okay. And is that's per property, not per
No, collectively. Right? So I could only lend you $5 million of SBA financing.
Yep.
Unless you do what's called an SBA 504 green. So let's just say you were going to expand your self-storage business, and you're going to, you have $4 million out between 2 projects right now. And now you want to develop a $10 million facility, self-storage. We could actually do what's called an SBA 504 green and add a energy efficient component to this new self-storage. Maybe we put
solar panels,
solar,
whatever.
Yeah. We can get up to $16.5 million of total SBA proceeds that way. So that's really like $38 million in buying power, because remember, you have a conventional piece and the SBA piece, which is only 40% of total costs, project costs. So, and sometimes on some certain projects, I go, hey, let's do bridge loan and we'll refinance into SBA. And sometimes it makes sense to do that. But I mean, really, the SBA loan is a tool that you can't get. You can get the highest leverage with this tool, because if you go with bridge financing, they're going to fund 65 to 70%, maybe, right? Where you're getting maybe 90% on this. On a business expansion, you can get, if you have existing performing self-storage facility, potentially you can get 100% to buy or to build a new facility. So on expansion, some of the lenders will actually do 100% loan to cost if you already have an existing business and you're expanding.
So let's use a real life example here. And is my mic better? Can you hear a lot of feedback?
It's like staticky. But
staticky, huh? That is not good. I will have to, 1 second here. I'm going to have to cut this part out.
It's been staticky for a while. I don't know if it's going to turn out. And it might be just the feedback of my earphones, but I don't think it is.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
All right. Is that any better?
Much better.
Okay, perfect. Okay, so we were talking about SBA specific questions. Let's use a real life example. I am currently closing. We should be closing next Monday on a self-storage facility out in Indianapolis. We have seller finance debt on it, $1.4 million for sellers financed. It is the original building design was for 11 buildings. They built out 5 of them. And then the seller just, he got old, stopped building, didn't want to do anything. So we still have plans for that additional 6 building expansion. With the SBA loan, so we have that seller finance debt already in place. Can we get the SBA loan for the expanded construction? I'm assuming they would have to be in first position, or would the SBA want to, could you do a wraparound? Because it's interest only seller financing. And we have it where you're not paying down principal for X number of years. And so would the SBA work in something like that? Or is it usually only for, a whole, for new construction where you're doing the entire property itself? Or can you have debt existing on the property?
You can have debt existing on the property. And if the cost of funds is pretty good deal, and with the rates right now not being as good, is there a way to just get an SBA and it would collateralize? Yes, you can do that. I would have to work with the underwriter on it just to clarify a few things, but I'm pretty confident that you could structure it that way potentially. Yes.
Interesting. I did not know that. Learn something new every day. That's what I love about real estate.
Because you have an existing. It would depend on your existing cash flows, right? Like if you have a decent, strong business.
Yeah, it's at about an 8 cap on the purchase of the existing.
And you have experience operating. So this is an expansion. So like, hey, we have good debt we have good seller finance debt. Depending on when the balloon was due for the seller finance, that might be the issue. So I'd have to get all those notes first.
Yep.
But I think we could potentially structure it, right? And at the end of the day, you're going to do a cash out refinance when that's done and stabilized, right? Because you're going to consolidate everything at that time.
Yeah. But we're not looking for a few years out there. But okay, that's really interesting. I don't want to get too far into my deal because I don't want to bore people here. But I did not know that you could layer debt like that. That's pretty cool. All right. So I did take a peek at the clock. We are running through our time. One more question on SBA loans. What are the rates that are happening right now in these days?
Sure. So the rates have gone up a lot. So 7As are tied to Wall Street Journal Prime plus the margin. So the margin is the spread, right? So you add the Wall Street Journal Prime plus the margin. So you're between 6.5 and 6.75 right now. It's a floating, adjust quarterly. The SBA 504 is probably the loan that gets fixed for 25 years. The junior loan that is probably about 5.5 now. So it's gone up a lot too. It was in the threes a couple months ago. So you're looking at 5.5 and probably about 5.5 on the senior debt. So that's blended rates should be somewhere in the low to mid fives right now.
And that seems high, but historically 5.5 isn't, it's not,
right.
It's not going to kill a deal.
Everything seems high because, 2 months ago it was a completely different story. But then again, people things are changing, right? And so you got to just look at. I don't really care about the interest rate. I just look at what's the profit and what's the cash flow on the deal. Because when I used to flip a lot of houses, that's what I would look at. Okay, I'm paying this investor, but he's putting all that money up, and so what's my net when I'm done?
Yep. All that matters is cash flow. I totally agree there. You can get a 20% interest loan if you have cash flow on the property. Interest doesn't really matter that much, so long as it cash flows. All right, that wraps up this portion. Thank you very much for hopping on and just sharing that. SBA is something that I feel a lot of investors can benefit from. So it's good to get that view on here. It is time for the quick question round, though. So are you ready?
I'm ready.
Let's do it. Starts with books. I'm a big bookie or any form of education. So give me 2 recommendations, one for general life wisdom and one for real estate specific.
General life wisdom, Who Not How. That's a great book. Awesome book. And then for real estate, I'm not going to say it's specific to real estate, but it's Never Eat Alone. Basically
by Keith Verzari or something like that.
Yep. Those are the 2 books of 2022 for me. So Who Not How is about delegation and just find the who, and he'll tell you how to do it, right? And so that's my whole life now. It's getting that delegated. The guy that wrote the book delegated writing the book to Ben Hart or whatever the author's name was.
So taking his own advice to heart. That's
very true for business. Okay. What was your other question? Let me see.
It was real estate, and you said Keith Ferrazzi. I can't remember whatever it is.
Never Eat Alone. Yep.
Yeah. Mm-hmm. Yeah, that's a good one too. Just so that one was basically don't eat alone. It's all in the title. Go out and make friends.
Yeah, take notes, connect with people, keep people around. And, I look at just my whole 20 years of business experience. It's if I would have just stayed in front of more people and it left everybody in a CRM, I would have been 10 times further along. So just, value relationships, and people want to hear from you.
Yep. Just connect in. Just, that's really the gist of it, is connecting with people. And I think I always say this so many times on this podcast, is that real estate and every business really is relationship business first and foremost. You're in relationships. So just remember that, and everything will fall into place if you never give up. That pushes us to the next question. This is for your younger self. So if you could go to the Beau who had no experience in real estate, let's say he was deciding between law enforcement and real estate, go back to him, look him in the eye, give him one piece of advice moving forward.
Yeah, simplest way to start. I bought my first house. I couldn't qualify for a loan, so I bought it on a lease option. And I wrote the contract at $325. This was in San Ramon, California, very expensive area at the time. I was 23. I'm 44 now, so 20 something years ago, right? And so I had a window after 12 months to buy it within 90 days, and I set the price at $325. I ended up exercising the option to buy it. It was then valued at $375. I had $50,000 of equity when I bought the property, and during the whole time before it was cool on Bigger Pockets, I was actually renting rooms out to cover the payment. So I invented house hacking, I think. And anyways,
it started here, ladies and gentlemen.
But I ended up selling that property in 2000. I think 2005 or six. And I just Zillowed it, and it's worth $1.3 million, and it would have been an easy property to be a rental property. And anyway, so buy real estate and wait.
Yep, that is timeless advice for sure. All right, that moves us to the next question, and this one is I just lost my spot. I do this every time. You think I'd learn. This one is for the United States. It's a big place. A lot of opportunity out there to invest. So what is one metro that you are most excited about that is not your backyard?
I like Pennsylvania.
Pennsylvania. Really interesting. You're the first person to say that. Why Pennsylvania?
Because it's got little boroughs and pockets, and real estate's relatively inexpensive in most of these markets, and people need a place to live, and you can still buy properties cheap. And I love cheap properties. That cash flow.
Don't we all? We're actually looking at one in Wilkes-Barre, I believe, right
Wilkes-Barre,
now. Yeah, mm-hmm. Wilkes-Barre. So cool. Pennsylvania, noted. That leads us to the second to last question. This is your Superman strength. We all are gifted with one specific strength, one thing that we alone can give to this earth. So what is your Superman strength? What are you exceptional at?
My Superman strength is reverse engineering things specifically to marketing and branding. I've always been really good at like figuring out how to get in front of people. And as Gary Vaynerchuk says, we're all media companies first, media agencies. So whether you're a real estate broker, agent, investor, if people don't know who you are and what you do, you ain't going to get no business.
That's for sure. Man, I still, every day I say that I'm going to take these podcast episodes and I'm going to chop them up and I'm going to do the Barry Vaynerchuk thing where you got like 900 pieces of content per long form, but I just haven't done it yet. I gotta jump on that train.
Who, not how? Go hire a VA in the Philippines like I did. And they have really good editors in the Philippines, and you can leverage them, and that would be my who, not how for you.
All right, noted. Do you use Upwork, or which platform do you use?
So I have 3 full-time virtual assistants, and they each do a little specific, little different. And then I also use Fiverr. For different things. So for my podcast, for example, I use a lady that I just found because I was trying to go back and remember the episode of my podcast, right? And I couldn't do it. It's like I interview a lot of people lately, and it's all a blur. So I take the Zoom link, I upload it. The lady writes amazing show notes. She timestamps it, and boom, you're done. So like that kind of who, not how. If we can do that in all of our business. So I think you've got to break it down for acquisitions. If you want to buy, like I want to buy duplexes and fourplexes in Pennsylvania. Here's what I want you to do. I want you to go on Zillow. I want you to then take the information, gross rents, taxes, insurance. I want you to put it into dealcheck.io. That's the simple one I use. I like it. It gives me all my breakdown right there. And then they would send it back to me, right? Like, so I'm going to like break down everything I'm doing and just have somebody else do it for me and pay them a fraction of the cost that it would cost me to do, because my time is worth a lot more per hour.
Yep. I love it. Who, not how, man. That's I'm going to have to pick up that book, although I've heard about the gist of it. So I like the message. So yeah, that leads us to the absolute last question. And this one is for the listeners, because you've given us a lot of good advice here. I'm sure people want to reach out and talk about financing, especially SBA loans. So what is the best way for them to reach out and get in contact with you?
You can go to beaueckstein.com, just my BEAUECKSTEIN.com. Or you can go to YouTube and put in Investor Financing Podcast in the search bar, and you're going to find 500 videos there.
Perfect. BeauEckstein.com. I'll put that URL in the show notes. So if you all want to reach out to Beau, just click a little more in the description. It'll pull down the full description. In there, you can find Beau's URL. Reach out and say hi. So Beau, that wraps it up for us. I appreciate it, and thank you very much for hopping on the show.
All right. Thanks so much. It's been a pleasure.
Thank you. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you have any question whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have a good week. Keep rocking real estate, and I look forward to seeing you on the next episode.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you're able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.